35% EBITDA margin on our mobile operations on own infrastructure. That will remain for sure. I showed you before that we had met the 20% ROCE target, and now it's time for us to shape it up. So we will now introduce a new target when it comes to return on capital employed going forward. 24% is now our new target. And this is, of course, because we think that we can achieve it. But you also saw on Cecilia's slide that in order to maximize our long-term incentive, we need that. But 24% is now the target, and we are working hard to reach them. And then, of course, we should always be able to be number 1 or number 2 in the markets where we are present. And a market can then also, for sure, also be a region. When it comes to the EBITDA target for mobile operation, my friends in the leadership team will talk about that in a more detailed way. But Russia is there. Sweden is not there yet, but we are really coming there soon, I hope. And then you know that it's also about how we really account for our joint ventures. Some of you analysts know that, so we can add on another 3% to compare us with peers. So we are also getting there. Norway, it's there now, but we don't have own infrastructure yet. But of course, the starting point is not so brilliant. But in our business case, of course, we have the target of 35%. Croatia, we will hear more about today, but they have turned the corner now. That's the starting point. And the ambition is to, over time, reach 35%. In the Baltics, it's Estonia who will make it over the planning period. And Kazakhstan started, of course, on a negative numbers, but they will also be there over time. So that was the financial targets. Before I stop, I will just talk a little bit about some other priorities. As you know, we are a challenger, and if you look at our strategic targets, to be a cost leader is extremely important. And I spend a lot of time around these topics, and our ambition is to be best in class. We have a quite advanced benchmarking program now, where we compare us with other operators. And I will say, unfortunately, we are not best in class, but we are quite close. And we are now coming closer this year compared with last year. And we have a saving program of 360 million krona this year. That will be met. And over the planning period, we definitely believe that we can be number 1 in this area. As mentioned before by my colleagues, this is crucial for us. One example of what we are doing now to take down cost in administration is to introduce a shared service center concept. We have done that in Russia. We are building up a shared center when it comes to IT in Riga. And on top of that, of course, the network sharing is a vital part of cost saving. And with the cost control, we also have to be good in quality. Quality in order actually to take down the cost, but also, of course, to improve the customer experience. So, what you should remember here is then that we have improved financial performance over time. We have now a new group target when it comes to return on capital employed. And we are very confident about how the business are doing right now as we speak. Yep.
Thank you, Lars. So should we black out that one and invite everyone to stand up?